Last week, the world saw perhaps one of the most alarming financial situations in a long while. The UK's pound, the fourth most traded currency in the world, had declined more than 5% in one day, basically reaching parity with the US dollar. Imagine losing 5% of your savings overnight. This was the lowest point that the UK currency had ever reached in its history. The crash threatened to decimate nearly 50% of the country's private pension savings, just to be deflected at the last second. So what happened? In this episode, we take a closer look. Welcome to Bulls and Bears. If you're new to the channel, hit the like button and subscribe if you enjoy our content. Now, let's go back to the video. To get the full picture, we should go back a couple of months. During that time, the United Kingdom began facing a cost of living emergency. Energy costs in Europe were increasing because of the ongoing Russia-Ukraine war. Inflation reached 10% in August, the highest level in 40 years. Among this backdrop, the recently elected government, headed by the new Prime Minister Liz Truss, revealed two strategies that assumed a critical part in the events of the week before. The first strategy, reported on September 8th, was the energy price guarantee. The point was for the government to limit energy costs for the typical family to around £2,500 each year for the next 2 years. Supposedly, this would be a saving of £1,000 each year. The plan is ready to cost £100 billion during the first year. Without having budget to support such expenses, the strategy will be funded exclusively by government debt in the form of bond issuance, which is inflationary. The second strategy was reported on September 23rd by Kwasi Kwarteng, the new finance minister. It was supposed to be a historic tax reduction plan for both the people and the organizations. The intention was to reduce pressure and give the economy a boost, guaranteeing steady growth. This strategy would have been financed by government borrowing, and this was going to cost an extra £45 billion. However, despite the respectable aim of protecting the people who are more impoverished, the approach was vigorously criticized. As some research points out, the rich were going to benefit at least 2 times more than the poor people. The international market took a look at this, and it drove them into a panic. The reasoning was these plans are just going to increment inflation, fundamentally leading to more issues than they solve. It prompted a lack of confidence in the UK currency. Each of these prompts led to September 26th and the renowned decrease in the value of the UK pound. There was a negative reaction and much doubt over the impacts of these new strategies and their consequences on the UK economy. This all drove investors to sell their Great British Pound-denominated assets. The outcome was an enormous decrease in the value of the British pound, as it was traded for other, quote, safer currencies. As the markets turned red, certain financial institutions weren't ready to deal with such a huge decrease in value. This was the situation for the majority of pension funds in the UK. In total, they held close to half of the private savings in the country. The issue began from a niche financial product that investment banks offered to pension funds. These products include leverage, which enhances losses, and this leverage also required collateral, and a huge part of the collateral was held in the UK national bonds. As asset prices began to decline because of the previously referenced policy declarations, the banks started to request more collateral. This forced pension funds to sell a portion of their assets to meet their obligations. Before long, the market was brimming with pension funds, hoping to sell their government bonds as they attempted to meet their new collateral requirements. With little demand and a great deal of supply, the prices began to rapidly decrease, placing the whole financial system in trouble. It was the beginning of a destructive cycle, and if it totally blew up, close to 50% of private savings in the UK would have been obliterated. Very soon after the chaos started, the Central Bank of England had to step in. They did so by promising to buy $65 billion worth of government bonds over 13 days. This basically placed a flaw in the prices of UK bonds. Thus, they were able to stabilize the bond market and prevent a destructive cycle. This is where supply exceeds demands to such an extent that their prices go to zero and assets become illiquid. As insane as this sounds, Perhaps the UK economy barely avoided crashing in that manner of a third world country. So with the assistance of the Bank of England, the crash seems to be prevented for now. As to the creation of this video, the British pound has recovered to its past levels, and the bond market gradually stabilized. However, with that being said, the UK economy isn't in the clear yet. Inflation rages on, and there's still a quality of encouraging organizations and people to spend more, pushing up demand and adding to inflation. As a result, imports will be more costly, and energy costs will rise. There's also an escalating fear that inflation would make the Bank of Britain raise interest rates even further. In fact, Andrew Bailey, the governor of the central bank, confirmed that they will, quote, not hesitate increasing rates by as much as needed. This will in turn make borrowing more challenging for organizations as well as ordinary individuals. The mortgage market knows all about this pain. Since the entire debacle, mortgage lenders have removed 40% of their new and accessible mortgages from the market, while at least 20 providers have extended their fixed-rate programs. For the new purchasers, this has made buying a home practically impossible, while existing homeowners with fixed-rate products remortgaging could double their interest payments, adding more than £2,000 every year to yearly expenses. With respect to the UK government, they've overreacted and already turned around the tax reduction strategy. Admitting failure after this commotion and after being all sworn in is a horrendous look for the current administration. So it's not only the UK that is in a difficult situation. That's a great deal happening in the financial world right now that I will try to sum up here. To begin, two significant financial institutions are in a difficult situation: Credit Suisse and Deutsche Bank, and their stock price has lately fallen by 40%. These are international systemic banks with $2.7 trillion in assets between them. These organizations are connected to other critical global financial institutions. So assuming they give out, numerous experts say that it very well may be another 2008 Lehman Brothers event. However, as of now, it's not possible for anyone to know. It just looks risky. China is also having issues. Their currency has fallen, and the property market is unstable. Zero-COVID strategies are diminishing economic output and causing pockets of civil unrest. And there's a whole lot more. Around the world, interest rates are rising, putting pressure on the huge amounts of debt held by countries, organizations, and people. Investors are getting frightened and running into the US dollar for safety, causing it to rise and turn into a wrecking ball, crushing the relative value of other currencies. Furthermore, because the US dollar is the reserve currency, almost all other countries need it to pay for anything, so it's a significant issue. If things get sufficiently terrible, other central banks might switch course very much like the Bank of England. Through lower rates and printing more cash, it could fight off a potential depression, but at the sacrifice of all of our currencies. Okay, so that is a ton of information, so I'll quit cramming the data here. However, to wrap it up back to the subject of this video, I want to hear from those in the UK. How are the discussions among your friends and family? What is everybody's take on the government mishap? Let me know in the comments below. If you enjoyed this video, hit that subscribe button, click on the notification bell to be updated on our new videos, and don't forget to give us a like if you want more videos similar to this one. See you in our next video!